Good morning. Welcome to Stock Market Today for Friday, March 12th, 2021. This is your host, Dan Russo, Chief Market Strategist at Chaikin Analytics. Find me on Twitter at Dan Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, give you daily stock ideas to consider. And that hits your inbox every trading day before the market opens. So, U.S. equities finished higher on Thursday with the Dow, the S&P 500, and the Russell 2000 marking record highs. Growth and momentum were the big outperformers from a factor perspective. At the sector level, tech, comm services, and consumer discretionary outperformed. Financials, staples, and industrials lagged the broader tape. Treasuries were mixed with the curve steepening. The dollar was flat versus the yen, but weaker against the euro and sterling. Gold finished little changed on the day. WTI crude closed up 2.5%. In Thursday's trading. Now, as we get to the desk this morning, S&P futures are down 60 basis points after Asia traded mixed overnight. European markets are mostly lower in early activity. Treasuries are weaker with the curve steepening, 10-year yield back at around the 1.6 level. Dollar is stronger on the major crosses. Gold is down 1.3%. WTI crude is off by 20 basis points to kick us off on a Friday morning that starts out with, as I said, record highs for SPY and IWM. Record highs, by definition, are not bearish. The trend remains up. All right. The trend remains to the upside. And SPY still has support at the 370, 380 zone, then 340 below that. Q's 300 holds as key support. Wondering now if new highs are to follow. IWM support in the 200 to 210 range held, and now we busted to new highs, 160 to 170 down below. SPY still has upside potential to the 413 level, and that's unchanged. Our views here are unchanged. Our base case was that the wavering trend would hold support and then work higher, and that's largely playing out. We're looking for the cues to follow. Now, pressure here this morning under on the futures. That's fine. We'll see how the day plays out. But thus far, the roadmap that we've been laying out continues to hold. We're going to see now next week could be interesting as there is a Fed meeting. So all eyes will be on that. But I think right now, the key themes are the kind of the factor rotation that we've been talking about. The size rotation as well from mega cap and into some of the smaller cap areas. None of this is new. It's been playing out. All eyes are going to be on interest rates here with the 10-year getting back above 160. Remember what we said, some of the key charts that we're looking at, Q's holding 300. Okay, so far so good. IEF holding 114. So far, so good. We may get another test this morning. And then the dollar, whether it's the Dixie 92 or UUP 25 to the upside, those are the levels that we're watching. We've walked through this thought process and this thesis, and we're going to continue to keep an eye on that in the final trading day this week and into early next week. So let's hit our market in a minute now. What are we writing about in the note today? Well, we touched on the first part already, the Dow. We didn't really show the Dow, but the Dow, S&P, and Russell 2000 traded to record levels. The Qs are testing their long-term trend line from below, and I think that that's important. So holding 300 was the first step in the stabilization process. Now, the next hurdle is to get back above our long-term trend line. I highlight this in our note to clients. Growth stocks are extended to the downside versus value, right? Like the growth to value rotation is well documented. I think at certain points, though, it becomes important to take a look and say, hey, is this getting a little overdone, at least in the near term? I think that case can be made. We'll take a look at the chart a little bit later on in the show. Semiconductors rally to a key inflation point. Not discussing it here. It's discussed in my note. However, and, semis held support similar to the Qs. The SMH held support at around the 220 level, and now it's rallied back to test its long-term trend line from below. And as I've said, futures point to a weaker open here today. Now let's look at the major indices from a power bar perspective. Solid day across the board. A lot of green on the screen. The Dow adds 62 basis points, 9-6 bulls to bears. S&P 500 strengthens, adds 1% on the day, 145 to 42 bulls to bears there. The NAS was your big outperformer on the day, up 2.3%, 21 to 18. So flips back to a bullish ratio. That's important. Small caps also an outperformer, 799 to 180, bulls to bears after adding 2.18%. Bonds down ticked on the day. Tech was your best performer. up about 2.2%, 22-7 bulls to bears. According to the Chaikin Power Bar, small cap stocks and large cap stocks are strongly bullish. Let's hit our stock of the day now. I thought it would be interesting, as I always like to do when certain areas of the market turn choppy, kind of drill down on those areas and say, where's the relative strength? What's holding up? So in the face of tech weakness over the past few weeks, CDW fits the bill of a name that has held up. CDW Corp, ticker symbol CDW, was up 2.27% yesterday. It's a strong trend above our rising long-term trend line. Also a strong industry group here in the electronic equipment industry, bullish rating. So we have a bullish fund that's outperforming and seeing the intensity of its outperformance pick up in the past couple of days. Overbought, oversold indicator rounding higher in that oversold position while money flow is bullish. What I see here is a breakout consolidation. We'll check back, or a throwback is the proper term for what we're seeing here. A lot of people use the term pullback, myself included. But in teaching my class, I was reminded that this is called a throwback. A pullback is when there's a breakdown and then a check back up to the breakdown level. That's a pullback. This is actually a throwback. So a little useless knowledge for you. Doesn't matter what you call it. What we had was a breakout and then a retest of the breakout level, and now a reassertion to the upside within this consolidation just below high. So CDW is a name that is held up within the tech space while the tech group has been weak. So I always look for those names for potential opportunities, and we're calling that out today. As we hit our sector tracker, movement in the last 5 days, all green on the screen, so that's important. Obviously, listen, I know that there's a lot of back and forth. I know that there's, a lot of talk about bubbles out there. But the simple fact of the matter is 3 of the 4 major U.S. averages traded at a new record high yesterday. Okay, we can't argue with that. That's fact, right? We can debate whether or not there were bubbles, whether there are certain areas of the market that are frothy. Those are subjective for the most part. That's a subjective view for all else being equal. What's not subjective is the fact that 3 out of the 4 major market averages in the U.S. traded at record highs yesterday. That's not subjective. That's fact. That happened. That's definition of an uptrend. And then when we look at the sectors, they're all green. Okay, they're all green over the past 5 days of trading. So a little bit of confirmation there. Discretionary materials, REITs, and utilities at the top of the list. Energy, industrials, and tech in the middle of the road. Comms, fins, staples, and healthcare at the bottom. Okay, that's it. These are facts. They are. That is what is. Our industry in focus today is insurance services. Now, remember yesterday we in the charts we touched on the broker dealers and the exchanges. We said financials are much more than just the banks. And, kind of piling on that thought process is here's insurance services, also part of the financial sector, which over the past 6 months, they've outperformed the S&P by over 11% and have a really bullish power bar ratio at 36-3 bulls to bears. Currently ranked number 6 of 21 subsectors, and it's actually moved down 2 slots over the past week. So some of the indicative names there might warrant some more attention. NStar Group, ESGR, was very bullish. Arch Capital, ACGL, is very bullish. And MetLife, MET, is also very bullish. And all 3 are holdings of a fund that is very much up and to the right. Bullish ETF rating for KIE. We touched on the ratio already. Strong trend above a rising long-term trend line. Solid outperformance. Overbought, oversold indicator, middle of the road and working higher. The only kind of hiccup I can see is this wobbling or neutral Chaikin money flow reading. But, for all intents and purposes, this is a fund that's trading very much near a 52-week high. It's in a solid uptrend. This is your definition of higher highs and higher lows, your textbook definition of an uptrend, and it is very much in place. So another bullish data point, if you will, for the financial sector. Taking a look at the sector, yesterday's movers and shakers, not the sector tracker, or movers and shakers, gainers and losers in the S&P 500. Not a ton of news on the gainers side of the board. FCX, Freeport-McMoRan, is a bullish stock, up 8.75%, part of that commodity theme. Enphase has been well represented on both sides of the board this week, up 8.5% yesterday. Didn't see anything company specific there. Etsy up 7.25%, no news that I could find out. Align was the best performer in the XLV yesterday. Align tacked on 6.3% on the day. And Xilinx, a little bit of a semiconductor rebound. Xilinx is very bearish, but the stock did rally 6.2% yesterday. On the loser side of the board, GE, analyst revisions after earnings. coming in a bit. Stock also caught a downgrade at OpCo, so we take 7.4% out of the stock. Oracle had broken to new highs, and then earnings came out, and the stock moves lower by 6.5%. Also caught a downgrade at SocGen, adding to the weakness on the day. NVR, part of the home builder group, has a bullish rating, down 4% after a downgrade from JP Morgan. Sealed Air, SEE, neutral stock, down 3.3%. Nothing company specific there. And Verizon down 2.75% on the heels of their analyst day. Some commentary out of there. Investors heard some things that they didn't like. So they took 2.75% out of the stock on the day. Let's dive into the charts now. Growth over value, or growth to value rotation. It's the theme. It's on everybody's mind. Now, the top was over 6 months ago. Let's be clear on that. That was September 2nd was the top, and we went choppy ever since. And if you look at some of the mega cap growth stocks, you'll see a very similar pattern at play. But we've now become somewhat extended to the downside relative to the 200-day moving average. So we're below the 200-day. The 200-day has gone from rising to flat, but we're extended below it for the time being, and hitting some near-term support for the ratio here. That all played out as the RSI of the ratio moved into an oversold position. Now, we've had a bit of a rebound from this near-term support level this week, which has taken the RSI out of that oversold position. So we'll see if the growth value ratio can build on that. And at the same time, it's kind of interesting. It's a very similar theme or dynamic in the market would be to look at the Qs against the SPY at the bottom of the chart there. And you can see after going sideways for 6 months, we are now testing support at those May-June highs. We'll see if that holds, right? These are interesting dynamics that are at play as the rotation continues to play out within the marketplace. I think that it's one of those things where if growth is going to reassert, you're likely to see it reassert from these levels. And if it fails and we break these levels, then you know that the rotation is still ongoing. Similar for the Qs versus SPY. So if you're thinking about idea generation, where to look, where to focus your attention, this ratio, these themes, this relationship is now at an important support level. In line with that view, right? Remember, a lot of the growth over value trade was driven by copper gold rolling over, right? So as copper was lagging gold, i.e. investors were pricing in slower economic growth, we bid up the growth stocks. Now we've seen a reversal of that. We've seen copper outperforming gold as global economic growth is improving, and investors are pricing that into the marketplace. So when growth is improving, it's no longer scarce, less of a rush to own what actually is growing. So as you've seen the copper to gold ratio move higher and especially accelerate higher, you've seen growth lag value. Very simple dynamic. Now, you can make the case that we're stretched relative to the 200-day as we trade into a resistance zone on the ratio, while at the same time, we're getting confirmation from the backup in yields of investors pricing in better economic environment as the 10-year yield has backed up to about 2.52% as of yesterday's close, trading, a 1.52% as of yesterday's close, and trading at 1.6% here this morning. So just kind of themes, relationships, and kind of get an understanding that a lot of what we're seeing, right, there's a rationale behind it, and it is being confirmed by intermarket analysis and these intermarket relationships that we track on an ongoing basis. However, the risk on type environment that bodes well for equities in general, I think can be summed up right here. If we look at discretionary versus staples on an equally weighted basis, and we do this equally weighted to account for the fact that within discretionary, Amazon and now Tesla are ridiculously high weights. But the fact that consumer discretionary is outperforming consumer staples and trading near highs is a bullish data point for equities in general. It is confirmed by the RSI rate being in the RSI of the ratio being in and holding bullish ranges. So that's what's on the screen today. This is what I'm watching. Our playbook, our roadmap, our base case continues to play out here for equities. New highs for 3 out of the 4 major averages is by definition bullish. They are by definition in an uptrend. And we'll continue to watch how that plays out. That'll wrap us up. Take us for a test drive. I hope everybody has a great weekend. Be well, be safe. Talk to you soon.